both the video and the audio, and I will be burning that to a DVD, and you'll be getting that in the mail. It will be basically the raw version of this webinar. I won't edit it. You'll get the whole thing, including the question and answers at the end of it. You're also going to get a Excel spreadsheet that I'm going to be using in the second half of this webinar to kind of show you the program that we use, so you'll have it to use for yourself, as well as 1 hour of phone time to help you with anything that any questions you might have. Those instructions I'll send to you with the DVD. Kind of explain, we'll need to schedule time to do that. It's convenient for both of us. We do have a lot of different time zones and stuff, so we want to make sure that we can accommodate your wishes, and we'll make that happen as quickly as possible. That 1 hour worth of phone time doesn't expire, so if you don't use it next week or you get into it in a couple weeks from now, that'll be fine. We'll just work out a time frame that's good for all of us to talk. So, all right. We'll go ahead and get started here. Before I do, let me unmute Grant. I want to make sure he can hear me now. Grant, can you hear me? Grant? All right, well, hopefully we have fixed that. All right, we're going to go ahead and get started here. What we're going to talk about today is really the foundation of our businesses, and it has to do with the basic structure of the financial side of it. We're going to cover just a few things. We're going to talk a little bit about a profit and loss statement, probably one of the most misunderstood items that we look at on a regular basis. We actually pay money for it and pretty much ignore it. So what we want to do is we want to kind of give us a brief overview of that, and then I'm going to work on the spreadsheet I'm going to send you so that you guys get a chance to see how it works, and I'll show you the difference that some of these mistakes we make affect us. Because in a lot of cases, the numbers that we use are erroneous because we don't understand the P&Ls ourselves, myself included. I have, looked at P&Ls for many years and didn't understand exactly what they were talking about. So I want to cover that today. All right, so let's go ahead and get started here. If I can, let's get the machine to work. Technology is great. There we go. So it's the foundation of your business. And a structure is a stable pattern of beliefs, rules, or principles. And one of the nicest things about financial structuring or profit structuring or any kind of mathematical stuff is we all follow the same formulas. It doesn't really matter where you live or the language you use, whether it's miles or kilometers or what. It's the same basic principles. The biggest problem we have is most of us were never taught these principles. Most of us have also guessed at the financial structure of our business. You know, when I first started out, the very first shop I managed, I set my pricing by calling around. I did what most everybody else did, was they called around and asked, hey, what are you charging, what are you charging? And it developed our pricing based on what everybody else was doing. So we need to figure out what our actual costs of doing business is. And I think this is where most small businesses, not just ours, but most small businesses fail, is nobody's ever been taught how to figure out the financial side of their business. You know, it's kind of interesting in Michael Gerber's book, The E-Myth, he talks about us being technicians. And in his book, he talks about a baker or a florist, but we're all technicians. We are doers. We have not been taught business. In fact, in all the years that I've been teaching automotive management, on occasion I'll have one or two people that actually went to business school or were accountants at one time, and even they didn't understand some of the financial issues that we have. So it's real important for us to get a grasp on this financial structure and stop guessing. We've never been trained in this business, so How are we going to make these good decisions if we were always out in the shop fixing transmissions or raising the kids or doing the things that we do? I think the biggest shock to me when I went from being a technician to being a manager was how much I didn't know, even though I'd worked in the business 10 or 12 years and several other businesses before that one. So it's important for us to become a real business people, if you will. Now, some of you have had this. Some of you haven't. Some of it's going to be a review. But most, I would say 95% of the people on this webinar today have not ever had any formal business training. We also tend to focus on the wrong priorities. We fixate on things that we understand, and sometimes the things we don't understand are what's holding us back. One of our biggest problems we have right now is I have people calling me telling me I don't have car count. When they actually have car count, they don't have the average ticket that they need to make the car count work for them. So it's really up to us to help you understand the financial needs of your business. And I have to tell you, if the financial needs of the business are incorrect, everything else, every decision you make after that's going to be incorrect also. And we also use the wrong information. I would say that probably 98% of all the P&Ls that I look at, of all the P&Ls I look at, are incorrect. They're correct for the bank and they're correct for the accountant, but they are not correct for you to make business practice decisions off of. And I'm actually going to show you how that happens, and we'll talk about why that happens, why they're doing numbers differently than I would like you to do the numbers. But we have to have the correct information to make a decision. We've all heard the old adage, garbage in, garbage out. Every day we see businesses making decisions on garbage in, and the results, the outgo is not what it's supposed to be. So what we need to succeed, we need to do our business based on the cost of doing business. What does it cost us to be in business every single day or every month? I'm always amazed at the number of very intelligent, very successful business people that don't know this number, or in worse, have an incorrect number because they trust the accountant and they trust the P&L. And we got to have them, but let me tell you, they can lead you down the path that's going to create some problems for you. We need to have a budget. You need to work off of a budget. You know, I'm like the rest of you, hey, that's a good buy, I want to get it. But we need to have a budget so we stay within our parameters and we stay within the ability of our shop to pay our bills. Sometimes the overhead is just far greater than we can actually produce with the staff we have. So we need to work within a budget. You need to have a management team that consists of the following professionals. And I truly believe you have to have these 5 people to be successful. And in most cases, you need 5 individuals. There's a lot of us use one of them for 2 things, and I think that's not a good idea. What we need is a good accountant. You need somebody that's interested in looking out for your best interest. He's maybe going to do some tax planning for you. He's going to help you with your P&Ls. He's going to help you make the financial business, the financial side of your business, as strong as you can. You should not meet with him one time a year. You should meet with him every quarter, plan out, do projections. You should never be surprised at the end of the year with taxes. You should have headed those off and known there was something coming your direction. As much as I dislike these guys, we have to have a good attorney. There's going to be legal issues. I don't think there's a week that goes by that I don't tell at least one client, we better run that by the attorney before we make a decision on it. Now, for those of you who don't live in California, you got it a little easier. But you need to be very cautious. This is a very litigated world nowadays, and you want to be as careful as you can to make sure you don't put yourself in any type of stressful situation because of something that we should have had an attorney look at. You need to have a financial planner. A lot of people like to have their accountant be their financial planner. I disagree with that. I think they need to be a separate party. They're looking out for 2 different sets of interests. You need to have in your financial planner, in your accountant, in your attorney, in any of these 5 people, you need to have a good relationship with them. You have to feel comfortable working with them. You have to make them feel good, or you have to feel good about them. This is not something where you buy the cheapest guy. You buy the guy with the personality or the girl with the personality and the knowledge you need. You need a good insurance agent, somebody to look over your insurances sometimes quarterly, make sure you have the right coverages for the right reason. I think a lot of us are underinsured, and in some cases, overinsured. So you need to have a good agent that you have a relationship with that's going to review your stuff on a regular basis. And of course, I believe you need to have a business coach consultant, somebody looking over your shoulder, somebody to hold you accountable I was talking to a gentleman this morning, and we all have great ideas, but we get caught up in the battle of fixing cars and taking care of the people we have coming in, and we forget the importance of getting things done, of implementation. So sometimes a business coach is going to be the person that kicks you in the butt and says, make sure this happens. A lot of times, you guys know what you need to do. We just don't get it done because we don't have any sense of urgency and we have no accountability. And I truly believe to be successful now, you have to have a willingness to do the tough stuff. I think everybody that's on this webinar today has kept an employee too long because you didn't want to fire them or were afraid to fire them. When you fired them, big sigh of relief went up in the shop. So you have to do the tough stuff, whether it be raise your prices, mark your parts up more, get rid of that cancer in the shop, whatever you need to do, you have to start thinking of this as this is your livelihood. We have to start making this business count. We're going to talk about Accounting 101. Now, if you're an accountant, you probably have heard of GAAP before, and what GAAP stands for is Generally Accepted Accounting Principles. Now, if you're an accountant out there, you're going to be very upset with what I'm about to say, but in your day-to-day operation of your business, GAAP doesn't really matter to me. That's the thing. GAAP is what the bank wants. GAAP is what the loan company wants. That's nothing to do with the day-to-day operation of our business. And that's really the only thing I'm concerned with, is the day-to-day operation of our business. We need to make sure that when you get a P&L, it's factual. Most GAAP-approved P&Ls are not factual for you to make good decisions on. So it's part of kind of like using the right tool to fix a car. If you don't use the right tool, it takes longer to fix it. You have to fiddle with things. You have to make things, creates mistakes. Two basic financial documents we look at is a balance sheet. A balance sheet is nothing more than a snapshot of the assets and liabilities of the company. It's what we owe and what we own. Now, the bad news is a balance sheet is usually outdated within 15 or 20 minutes of it being printed, because any money that comes into the business or goes out of the business changes the balance sheet. So the banks like it. It's good for us to have it. It's good for us to know what our assets and liabilities are. But in the day-to-day operation, it's not as important as your profit and loss statement. Profit and loss statement is actually nothing more than a financial history for a period of time. So the balance sheet is a picture taken right now. A profit and loss is a history of what happened for a set period of time. So if we're looking at a P&L for October, it's what happened in October. It is very simple in its concept. It is money deposited and money spent. It's the money that comes into the business. It's the money that goes out of the business. It's going to give you a different picture of your business than your management system will. Your management system does not have every bill entered into it, nor may it not have every dollar deposited. So the balance sheet is good for the banks. It's good for us to look at the big picture. Profit and loss is what you're going to use to help you make decisions in your business. And as I said, about 98% of them are actually not correct. So let's understand this profit and loss statement a little better. I think a lot of us look at it every month, but we just don't understand it. And that's where the accountant does it so he understands it, and it's not necessarily something that we maybe have ever been taught to read. So I want to walk through the profit and loss statement. It is a little confusing at some times, but we want to make sure that you have at least a basic understanding of it. And this is certainly something that we can talk about in our hour-long consultation with you. Sorry, I'm handling a problem with one of the attendees, that we can talk about so you better understand it. A profit and loss has some very basic categories, and the first one that we look at is sales. Now, sales, income, and revenue all mean the same thing. It's going to be money deposited in the bank, whether it be cash, checks, credit cards. It's money for services rendered. And typically, we sell three basic things. We sell parts. We buy them and resell them. We also buy and sell labor. I want you to think about the fact that even though your employees are on a salary, we're buying labor from them. That's what you're paying them for. So we have to account for the money they made us. And then, of course, typically we have sublet. Now, some of you will have your top half, your sales portion, very, very detailed. I've seen them broken down into tires and batteries. That's great. But here's the thing. If you have a category for it in sales, you need to have a category for it in the cost of goods sold, which we'll get to in just a second. So if you're going to break batteries out because they're a lower profit item and you want to separate that, that's all well and good. Make sure there's a cost of goods sold associated with. And the real idea is that if I sell some stuff. So in my example here, I sold 50 cents worth of parts. I sold 50 cents worth of labor. I have $1 in total sales. That anything that I have in the sales, income, and revenue column, I need to have under my cost of goods sold. So if I have batteries listed, I'm going to have batteries listed under cost of goods sold. If labor, sublet, smog certs, anything you have in this area here, you need to have in this area here, with one exception. Some people will have a discount category at the top to show the discounts they've given customers. Will not be a corresponding cost of goods sold for that. So in our example here, we sold some stuff, 50 cents worth of parts and 50 cents worth of labor, and then we had 25 cents worth of parts. That's what I paid for my parts. I have my labor. I paid my technician 25 cents. That means I have a total cost of goods sold of 50 cents, which means that when I subtract sales from cost of goods, I have gross profit. So I made 50 cents on this sale. Now, in reality, we always talk gross sales. When you get a bunch of people together, shop owners together, we always talk about gross sales. And to me, that's the least important number that we should be bragging about. The most important number should be this number right here, which is gross profit. This is the money we retained to pay our bills. If it's not correct, we have a negative number. If it is correct, we made money. So let's look at this scenario in another way. We sold parts and labor at 50 cents. We sold $1 worth of sales. We have 50 cents left over here in gross profit. If I raise my parts a little bit and charge a little bit more for my labor, I have $1.15 in sales. Now, in reality, did my cost of goods go up or down? Well, they didn't do anything. I still paid for the same technician. I still paid for the same parts. All I did was mark the parts up a little more, and I marked the labor up a little more. I made just a few more cents on everything I sold. My cost of goods stayed the same. The difference is I have 15 cents more at the bottom line to pay my bills. I find, and I'll throw a number out there, probably about 85% of everybody in the automotive business does not get the correct gross profit. Almost everybody is getting the incorrect gross profit. What's this mean to us in our business? Our gross profit goals should be 60% on parts. That means for every $1 worth of parts I sell, I want to keep 60 cents of that to pay my bills. My gross profit on labor is I want to keep 70 cents for every $1 of labor I sell, and I want to keep 50 cents for every sublet dollar I sell. These are our goals. My total ticket goal is 66%. So that means out of every $1 I sell, I want to try to keep 66 cents to pay my bills. It can be done. It's difficult. We have a lot of shops, 62, 63, 64%, which is very, very good. I would venture to guess to say the average gross profit in most shops is in the 40s. Some of it's even lower. It's not enough to pay your bills, as some of you probably already are aware of. So let's look at it differently. This was our gross profit. Our first scenario was 50 cents. Our second was 65. Our target 66. So then we have these things we call expenses. What are expenses? It's everything else the company pays for. If it's not a cost of goods sold, which means it's not my technician labor, that's their base wages, unloaded in our examples. If it's parts cost or sublet cost, those are the only three things that are in cost of goods sold. Bonuses, incentives, commissions, those kind of things are going to be expenses of the company. It's everything else the company pays for, including the owner. If you're a corporation, an LLC, an LLP, you probably writing yourself a check every month. If you're a sole proprietor, your accountant is not going to put your draw typically in your P&L. It's part of the balance sheet. It's retained earnings. make sure that if you're a sole proprietor, your draw is on your P&L. The other thing that we get in trouble with is the loans and leases. According to GAAP, loans and leases are a balance sheet problem. They go on the expenditure side of the balance sheet. Your interest will show up on your P&L. So if you have a loan that's, say, $500 and $300 of its interest, that'll be on your P&L. But the $200 principal payment will not be. And that's where your P&L can get you in trouble. And I'll show you that when we get to the spreadsheet in just a minute. And I don't put depreciation or amortization on there because it's not real money. It's kind of what I call play money. We put it in there. Now, when you do your taxes, when you go to the bank, we definitely need a GAAP-accepted P&L. But for your day-to-day operation, we don't need these things, depreciation and amortization in there, but we do need the draw, loans and leases, and everything else the company pays for. So that means our total expenses, our total expenses. In this example is 60 cents. Well, we only gross profited 50, so what does that tell us? That tells us we have a little bit of a problem, doesn't it? So our net profit is a negative number. And I'll venture a guess to say a lot of you, that's the only thing you look at, is you get your P&L, you pick it up, you look at the net profit, is it a positive or negative number? If it's positive, you get all happy. If it's negative, you put it back in the drawer and ignore it. Not a good place for it to be. We have to understand why it's a negative number. Now, my second example, I have 65 cents worth of gross profit. My expenses didn't change. They're still 60, which means I have a profit of 5 cents. Now, doesn't sound like much, but that's a step in the right direction. Nationwide average, automotive repair facilities, net profit hovers around 4%. And I have to tell you, that makes me feel sad to think that of all the effort that you guys put forth, we're only retaining 4 cents out of the dollar to grow the company, provide a return on your investment, those kind of things. Those are definitely not good numbers. Our target number, what we're looking for, is 18 to 24%. So we want to make sure that we're trying to maintain a certain return on our investment. That's the idea behind net profit. I want you to pay yourself in the expenses, but I also want you to have money left over to grow the company for expansion, buying the property, all of those things. A lot of you are basically taking all the cash out of the business. I'm okay with that. But we need to have some room for growth. We need to have some savings account for the slow times and for incidents that happen. So keep in mind that we need to have net profit. If you feel you want to take all the profit out of the company at the end of the year to reduce your tax, perfect. That's fine. I'm okay with that. But we need to have something there throughout the year to make sure we can survive. You need to make sure that you have that savings account for the business. What's your business's potential? This is a question we get asked a lot. What is the capability of my business? It's really some simple math, and we're going to walk through it real quickly. Here's what you need to do that. You need the number of technicians. How many people do you have working? And by the way, it is okay to have a half a technician or a quarter of a technician, because there's going to be some cases where you have a part-time person or apprentice. So you could have 3.5 technicians. And occasionally, when you owners are out in the shop working out there, if you still do that, you might be a quarter of a technician, because let's face it, you've got other things taking your time. So it is possible to have 3.5 technicians. The number of days we work each month. If you're open Saturdays or Sundays, factor that in. We're going to use a 5-day work week and an average of each month, but you can do it for each month. And then we need to know your percentage of parts to labor. Most general repair shops are going to be about 55-45. Some are going to be a little bit higher if you do a lot of electrical, a lot of drivability diagnosis. Transmission repair, that ratio is going to be higher labor to parts also. But you need to have an idea. In our example, we're going to use 50-50 split. So we're going to use 4 technicians. I have 4 technicians. They work 8 hours a day, an average of 21 days. This is an average month with a 5-day work week throughout the year. So we have 672 hours to bill. This is our inventory of labor, 672. I take the hours available times my labor rate. So if I'm at $100 an hour, and this is what we're going to use in our example today, just because it makes it easy for me to do the math, we have $67,200 worth of potential labor we can sell. If I add my labor sales and my projected part sales together, I should have $134,400 worth of potential. This, again, being a 50-50 split. So if it was 55-45, this number would be a little lower. But this gives you a real rough idea what your shop's capable of doing. If you do these math and you cannot get to this number, we have to find out why. You have this inventory of labor of 672. You're not selling it. And we need to figure out why that is. And it's more than just the technicians. It's process, procedure, it's everything. And again, that's something we can certainly talk about in your hour's worth of phone consultation. What you need to determine your shop rate, your average monthly expenses from your profit and loss. Again, I'm going to show you how if you just believe your profit and loss, you can create some problems for yourself. Your average monthly parts profit. We need to know what our parts profit is per month as an average. This is something I'm going to talk a little bit about. Most of us pay vacation time for our employees, but we don't factor it into hourly rate. I'm not going to get into that a lot right now. Certainly call me and I'll explain to you a little more in depth. But what I have a lot of my clients do is actually factor in the technicians and their office vacation pay and factor that into their hourly rate so it's being paid for every hour we bill. Be sure to include these in your monthly expenses, your principal payments for loans and leases. Anything that you want the company to pay for has to be included in the following spreadsheet. Any debt payback. If you've lived off your credit cards like a lot of shops have because things got kind of tight, make sure that in these calculations we're going to do is your debt payback, your line of credit, whether it be personal or professional. If the business is supposed to pay for it, it has to be in these numbers that we're going to talk about in just a minute. Make sure your draw is in there. Make sure that your wages are in there. Even a corporation, LLC, LLP, make sure that your wages are in there. It's not okay, in my opinion, for a shop to be functioning and not pay the owner a regular paycheck as if he was or she was an employee of the company. We have to make sure that they get paid also. And, of course, any savings, capital, retirement accounts, you want to make sure that you have all of that money into your hourly rate. This, again, is a place where we don't plan to save and we don't plan for capital accounts. If you have questions about these, what we use these for, that's certainly something we can follow up on in a phone conversation after the webinar. So let's move on to the spreadsheet that we're going to talk about. And this is the actual spreadsheet you're going to get. It is also not going to be filled out. It's not going to have anything in it. It'll be blank for you. And basically, this is page 1, business income. How many months are we representing? Now, this is an actual shop's numbers, so it's a 12-month. This is their 2008 numbers. How many cars did we work on for this entire year? Now, if you're working off a 6-month P&L, simply input 6 in here. All the blue cells are data input. You can change everything that goes into the blue cells. So if you have a 6-month P&L, you put it there. If you have a 1-month P&L, just put 1 month in there. How many cars for that same time frame or period of time? So we have labor sales of 470, which averages 39, parts sales of 36, sublet. Now we also have included some miscellaneous in case you have it broke down here. Our cost of goods sold, what our technician costs us each month, what our parts cost is, what our sublet cost is, our total sales, total cost of goods sold, and then here is the profit for each of those categories. So our gross profit total is about $41,000. So out of $78,192, we're retaining $41 to pay our bills. Again, these are individual numbers. We're making about $17,000 on parts, about $22,000 on labor, and about $726 on sublet. So this is our gross profit, 58% on labor. What was our goal here? That was 70. So we know we're low there. Our gross profit on parts was 47. We want it to be 60. Our gross profit on sublet should be 50, and it's 32. So this shop averages about a 52% gross profit for the year. So the first thing that you're going to need to do when you get the spreadsheet is input your sales and your cost of goods sold, because these numbers here, as well as your parts profit, are going to be needed on the last page of the spreadsheet. Page 2 is we start listing the expenses of the company. Now, we've listed a lot of the most common ones, but we've also given you the blue ones where you can add things that may not be listed. It's really not so important to list every category, but it's important to get every dollar you want to spend into these 5 pages that we're going to go over. If you don't put it in one of these spreadsheets, one of these expenses, you won't figure your hourly rate with it. So our advertising budget, our telephone costs, our utilities, our office help, we have a part-time lady that helps us in the office, our service rider, the owner's draw, any bonuses and incentives we pay, the bank charges, credit card charges, equipment, postage. Throughout these pages, just fill in your expenses. We spend money on fuel and maintenance on the vehicle, shop supplies, small tools, uniforms, dues and subscriptions, technical information, updates, equipment rentals. Maybe this is stuff that you don't use every day. Travel expenses, any entertainment, training and education, professional fees. This is going to be your accountant, your attorney, your consultant. If you charge hazardous waste, or if you don't charge for it as a sale item, put it here so it's built into your hourly rate. Alarm system, license and permits. If you have a savings account that you then put money into every month, put that here. You notice that in this case, we don't have anything here. So it's not going to help us when this is blank to build it into the hourly rate. If you want to have your vacation pay taken care of, you put in what your yearly cost for vacation pay is. To all of your employees, it breaks it down into a monthly amount, puts it into the hourly rate computations. Health insurance, life insurance, garage keepers, this is liability in some areas, workman's compensation, payroll taxes, your estimated income taxes, property taxes, any payroll fees for services, any loans or leases, other things, scholarships that you may support, funds and donations, interest payments, and loan expenses. Now, you notice we don't have any payments here because on this gentleman's P&L, it doesn't list them as part of it. We're going to go back. I'm going to show you what it'll do to the computations in just a minute. We'll add in his actual loan expenses. So throughout these pages 2, 3, 4, and 5, you want to make sure that everything you want the business to pay for is inputted. If you want your customers to pay for it, it has to be on these pages 2, 3, 4, or 5. Then we go to the actual computations we're going to be doing. It gives us the totals of each pages as a monthly average. So in this case, it's $38,655.54. This is what it costs us to keep this shop open each and every month so far. When I add the things in that the accountant left off, you'll see this number change. We're averaging about 21.3 work days a month. We work 8 hours a day. And by the way, if your guys work 9 hours or 10 hours, make sure you put the right amount of money in, or the right amount of hours. They work about 170 hours a month, each technician. We have 4 of them. So we have that 681.6 hours to bill. That tells us our available labor, or available hours of inventory. This number here, the overhead number, comes from right here. The parts, the technician wages, comes from page 1 right here. So that's no input necessary by you. The parts profit comes from page 1 also. And what this means is this number of $37,604 means that our labor has to pay for that $37,604. What we do is we take the overhead, add in the technician wages, subtract the parts profit, and we come up with our labor needs to pay $37,604, which means if we divide this number, 37,604, by 681.6, our hourly rate should be $55.17. Now, our technicians have sold on an average of $39,000, and our hourly rate is 100, which means they're only billing 392 hours out of 681. They're 57.55% productive, which means that our true flat rate is actually $57, not 100, but actually $57. See, the problem that we have is we think we're charging this $100 an hour, but when our guys are not productive, we're actually lowering our hourly rate. So the interesting thing here is we need 55, we're billing 57. We're actually making a couple dollars an hour, not nearly what we should. Our average repair order is $450, which is a very good average repair order. Anything above $400 for general repair is a very good repair order. The gross sales need at the current expense load and GP of 52%, again, this comes right from page 1, we need to do $71,000 to pay our bills. Our current monthly gross sales is 78. So you would look at this and say, hey, man, we're making $7,000, pretty close to it, every month. That's good. We've got a return on our investment. We got net profit. Well, this is where your P&L can create a false sense of security. So let's go back to page 5, and let's add in his debt load. He has several payments that he makes on a monthly basis. Oops, not 80. All right, so what we just did is we added several $1,000s to his overhead that wasn't on his P&L. The reason we know these numbers need to be added is because we've explored his P&L and discovered these payments that aren't being listed there. They're in his checkbook register. Every one of these show up on a balance sheet, but they don't show up on his P&L. So what's this do to our hourly rate? Remember, this number was $38,000 a minute ago, and now it's 44. We have the same number of hours to bill, but you notice our need now is 63. Our true flat rate is 55. Our gross profit, our sales needed at this gross profit level for $44,000 is $83,000 worth of sales. So instead of making $7,000 a month, he's actually losing about $5,000 a month because he believed the profit and loss statement as the accountant handed it to him. Now, there's a couple things that he could do. He can lower these expenses, obviously. He can raise the gross profit. It's at 52. If he was to raise his gross profit to $60,000, or I'm sorry, to 60%, he only needs to do $72,500 to pay his bills because he's retaining more of each dollar. He's keeping 8 more cents of every dollar to pay his bills. If he was to jump to 65, he would only need to do $66,000 in sales. And the difference is he's losing $4,800 in the second scenario. In the first one, he was making $6,900. And this is the problem that we have with a lot of profit and loss statements, that we have with a lot of you guys in the field making decisions, is the profit and loss statement is not accurate. And by it not being accurate, we have erroneous information. So the other thing that I would recommend you do, once you get your hourly, your monthly overhead calculated, is we have this place here for adjustments. Just like on an estimate to a customer, I always like to have a little cushion just in case something happens, just in case we have an unforeseen expenditure. We can go in here and add a percentage, say 5%, and it's going to up our hourly or up our gross, our expenses, which in turn tells us we have to change our calculated rate. Now, in this scenario, let's take this 5% off. If we were to analyze this scenario here, he needs to be at 63. He's charging 100. His flat rate's 57. He doesn't need to change his hourly rate, although he could to offset this. What he really needs to do is fix this issue right here. This is his problem. He's not productive. So raising the hourly rate, we could certainly do that and fix his problem. The problem we run into, though, is that he would have to double his current rate. He would have to charge $200 an hour to offset this lack of productivity, and most of us would never do that. So although his hourly rate is correct in the sense of it's high enough, he needs to fix his productivity problem. And that's where this set of spreadsheets can really help you narrow down where your problems lie. Do we have an hourly rate issue? Do we have a productivity issue? Do we have an average ticket issue? Now, for example, I said a lot of people have too many cars. If our average ticket here is $200, we're missing dollars and cents because we're doing too many cars. If your average ticket's $700 and you're not making the gross sales, then you probably truly have a car count issue. So this spreadsheet's designed to give you some tools to help you kind of overcome some of the information overload you have. This is not a complex program to work. It really just involves you putting the numbers in, looking at your checkbook, making sure that in these expense pages you have every expense that you have listed. And if you were in here on page 2 here, and you are under officer's draw. Now, this gentleman's taken a healthy officer's draw, which is great. But let's say that you're not taking the money you want, and you want to say, well, you know, Malin, I really need another $2,000 or $3,000 to help me pay my bills at home. So we add $24,000 to this. We bump right back here to the hourly rate, and what's it say? Our hourly rate goes up a little bit. Okay, we're still covered. We still have this problem. I can't get you more pay until we fix the productivity problem, or we double our hourly rate. So this will help you with some what-if scenarios. The spreadsheet is protected, so you can't go in and put anything that's not a blue square, so you don't have to worry about messing up formulas and such. What I recommend you do is you do one with actual expenses based on your P&L right now, and then save it as a different file name, and then open this up and kind of do the what-if scenario. What if I added this, or what if I did this? Let's say that it's time for updates on your computer system or your scanners, or we're going to buy a new scanner, we're going to buy the laptop software, and you go, okay, what do I need to do that? Well, instead of increase in draw, it'll be an increase in equipment or something. Plug the cost of that in here based on a yearly expense. Go to page 5. What did it do? What do I need to do to fix this? And you'll find, in most of you, this number, the flat rate need, you're going to be okay. What's really going to be off is this true flat rate, what you're actually charging per hour because of your productivity and because your gross profit isn't where it's supposed to be. So what I'm going to do now is we got about 10, 15 minutes left. I want to open this up for questions. I know that we've covered quite a bit of material fairly quickly, so I will be more than happy to open up all your questions. Now, I don't want to unmute everybody. We have 12 people on the phone, so it could get real noisy. So if you just either type me a question on your go to webinar screen, or raise your hand by clicking the little hand icon up there, and I'll call on you, unmute you, and see if we can't get your question asked and talked. If you type it to me, I will read the question so everybody knows what the question is. So are there any questions that you may have? It was clear as mud, huh? Now, well, one of the things, because I noticed that we do have a couple people on here that use the Profit Boost system, which is they actually use PIF, which is a little different mindset. This is basically an accurate way to determine your hourly rate. It's going to be a little different with PIF, but if you set your hourly rate properly the way we're talking, and the difference between us and the way PIF does it is they're actually factoring adjusted capacity here, not total capacity. That would be the biggest difference. And that's something we'll talk about one-on-one. So Grant asked, do we get the spreadsheet? Yes, you get the spreadsheet that I just went over, these 5 pages. Now, this is in Microsoft Excel 2003. If you don't have Excel in any version, if you go to openoffice.org, I believe, you can download an Office suite that's free that will open Excel, and it functions pretty much identically. There may be a couple little changes, but it's openoffice.org, I believe, or if you just Google OpenOffice, you'll be able to open this up in anything. John asked, is that labor unloaded or unloaded? I look at it as unloaded. The reason I do that is because it's very hard sometimes to break down each individual loaded cost. So I like to just build the loaded expenses, and if you don't understand what loaded and unloaded employees mean, it's not what you think, not from the 60s or 70s. What it means is, am I factoring my extra cost of taxes, benefits, work comp, insurances into the cost of that technician? When we talk cost of goods sold, it's their base wages. Put the loaded expenses into the expenses of the company. I hope that answers your question, John. If not, clarify and ask more. Can you email the spreadsheet first? If you guys would like me to email the sheet to you before I send it out on the DVD, absolutely, I'll do that this afternoon to everybody that I had involved today. That's pretty much if you'd like that, I'll just do that. I'll just make that happen. But I will also send it to you on the CD so that you have access to that. If there are services that we just pass through to our customers, this is from Sue. Okay, do we exclude those dollars from the P&L? If there's, you mean you pass through as if you don't charge them any profit for it? Is that your question? And I would ask, what would those services be? If you could clarify that for me, Sue, I would appreciate it. Actually, Sue, let's do this. Let me see if I can unmute you. Sue, are you there?
I am.
Okay. So you asked if there are services we just passed through. Are you talking about no-profit items?
That's correct.
And what would those items be that you're not making some money on?
Alignment, tires, emissions.
Okay. Well, alignment and tires, I would want you to make something off of, even if it's a small token amount. But because you write checks to the alignment company, to the tire company, to the emission company, it has to be on your P&L.
Okay.
It should be as a cost of goods sold. And even if you don't make any profit to them, are you putting them on your invoice?
Yes.
Then
they need to get the work done, and since we don't do it here, we just run it, next door or down the street for them, and so that when they pick it up, they just have the one ticket. We just add their charges over there onto our ticket.
Okay. Well, what I would do is I would make a small token amount just to cover some aggravation expense. But if you're not going to do that, it's still a sale in your point of sale process, so it should be on your P&L. So you need to have the corresponding cost, because if you don't.
But how do we accurately get a true cost of goods? Because that throws the cost of goods way off.
Well, but it's an accurate number, isn't it?
It is.
If you don't make money at it, it's still a cost of goods.
Right.
So the way I would do that is I would list those 2 or 3 items as separate in sales and cost of goods, so that if you wanted to break them out to see what your true profit was, gross profit was, you can just take those out of the equation. But they need to be on your P&L because it's money you took in and it's money you spent.
Sure.
But what I would do is in sales, I'd have parts, labor, sublet, alignment, emissions, tires. Cost of goods, parts, labor, sublet, alignment, emission, tires. So I could break those out so we know exactly what they're doing to our gross. How much money is it every month, Sue?
It's not significant. It's not but when it happens, so.
Right. And I understand why you do that. I personally would make something off of them, even if it was just $5, $10 off of each of those services, just because I'm handling the paperwork of it. And ultimately, you're in South Carolina?
Georgia,
I'm sorry. I'm not sure about the laws there. In California, if it's on my invoice, I own it for my warranty period. So you need to make sure that if you put a set of tires on a car, it's on your invoice, and you don't make any money on it, and those tires go bad or cause an accident, you could be held liable for that because it's on your invoice.
Oh.
So you need to talk, you need an attorney. I would talk to an attorney about that. And also if you have a Department of Motor Vehicles that regulates you in Georgia, I would talk to them about that also.
Okay.
All right, and if you want to discuss that further, you have my number, so you just give me a call.
Right.
Okay? All right. Anything else I need to clarify on that one?
No.
Okay, just for your information, Sue, Paul says never swap dollars for dollars. I agree 100%, Paul. I want to make something on everything. Thank you for your input. All right, Sue, I'm going to go ahead and mute you again. Let me see if there's anybody else that needs anything. Thank you for your attention.
Thanks.
Okay, any other questions? Thank you for that comment, Paul. I do agree with that. Let me see here. Alan Hopkins. Most customers will not mind paying a little more on sublets for the convenience. Absolutely. And I agree with that, Alan. Great comment. And the other side of that is what I told Sue is I think there may be some liability issues if it's on your invoice. And I'm pretty much old school. If I'm going to take the hit for liability, I want to make some of the profit for it also. But, each shop's going to do things a little different. That's one of the reasons why I don't believe there's cookie cutter or one size fits all. We need to have the opportunity for us to tailor it to what we need to give our customers. Any other questions that you might have? All right. Now, remember, I'm going to email everybody the spreadsheet right away. I will also include in that email my contact information if you have questions. Today's the only day I'm in the office this week, but if you call my office number, leave me a voicemail, I will get back to you. It's pretty important that you let me know of time zones. I have a tendency to think the world revolves around Pacific Standard Time, and if you give me some time zones, I'll make sure that I call you sometime other than 1 o'clock in the morning or 5 o'clock in the morning. So that's part of it. One of the other things that I wanted you guys to know is I will be invoicing all of you to show your payment, so that'll be coming also through email here probably over the weekend. Sue asked, you indicated we'll get a copy of this webinar to review. When will this be available? My goal, Sue, is to have the DVDs in the mail to you guys this weekend. It's going to be a Saturday project for me. It takes a couple hours to render the video and stuff and get it all ready to go, burn it to DVDs and get it in the mail to you. So my goal is to have everything in the mail this weekend to that, but I will send the spreadsheets right away. I will send contact information. And one of the other things that I wanted to share with you, I know a lot of you have been to some of our other webinars. We have actually put together an entire schedule of webinars for this coming year, 2010. What you're going to get with this is the DVD, the Excel spreadsheet, 1-hour phone consultation, as I said. But here are some of the webinars we have coming up in 2010. This will be part of the video or the recording you're going to get, and I'll include a schedule in there. We will be redoing profit structuring in January, but we've tried to put a whole set of numbers classes, sales classes, managing people classes, again, all in the same format, about a 1-hour webinar, recorded. You'll get the recording. There'll be some bonus things with some of them. One of the ones you may want to really pay particular attention to is the roundtable. We're going to be doing a roundtable discussion with our clients that we see on site, and we're going to be taking the hot topics of that roundtable and turning it into a webinar. If you have something that you'd like to see us discuss, I realize it's a few months away, but something that is your hot button or something that you're having questions with, all you need to do is send me an email, say, hey, Malin, what about this? And I'll be able to include that in the webinar. So Alan has a question here. Is it true that the tech productivity is both a function of their ability to do the work in a timely manner, but also our ability to keep the shop books so they are not idle? Great point, Alan. And actually, there's another part to that that you may or may not think about. There's two things that you really track with a technician. There's what is called efficiency, and a lot of shop management companies really beat you up about tracking efficiency. And then there's what I call productivity. So the difference is if a technician is on site 8 hours a day and they bill to the customers 4 hours, they're 50% productive. They had 8 hours of inventory to sell, of labor inventory. They sold 4 hours. Then there is efficiency. He's on site 8 hours. He billed 4 hours to the customer, but he did the 4 hours worth of work in 2 hours. That's efficient. He was very efficient, and he wasn't productive. Inherently, tracking efficiency can affect productivity because they really need to log on and off every job. If you have a good software system like Profit Boost that allows them to clock on and off the jobs and you have the terminal by their workstation, it makes it much easier to do that. But if you don't, then they're walking across looking at the time clock. Here's the things that affect productivity in a shop. It's the technicians and their ability to do the work, as Alan states. It's the amount of equipment that we have, the proper equipment to do the job. It's car count, how many cars we have, how booked we are. It's the mix of work we get. We can't be very productive if we're doing nothing but oil changes on cars that we just did all the work on. And that happens to be a problem that a lot of shops have. They don't have enough new customers. It's a factor of how fast can we process the work in the office. How long are they waiting for estimates? Are we not getting phone numbers to call customers back in a timely manner? You know, most of us as shop owners and managers want to go beat the technicians up when we're not productive. It's really a factor of each and everything that happens in the shop. If we don't get the right information on the write-up, we waste time. If we don't have the right equipment, or the shop's not set up, or the shop's not clean, we're looking for equipment, don't have the right equipment, it affects productivity. It's information access. It's parts delivery. It's how fast the service writer writes the estimate, calls the customer. It's how fast we can get the parts there. All of those things affect productivity. That's really the number I'm most concerned with. Efficiency kind of takes care of itself if they're productive. I mean, does it really do you any good to know he did that 4 hours and 2 hours if he didn't bill anything else for the rest of the day? We still lost 4 hours of productive time. So that's why I look at productivity. Your question's correct, but it also factors in everything else. You know, Alan and I were talking this morning. He's in Canada, and we were talking about, you know, when the snow comes. Well, you know, not being able to get into the building because we have a, you know, snowdrift in front of the door, or spending a half hour cleaning the driveway to get vehicles in, that's going to affect productivity. So you really should track that shop use non-productive time. The guy's on site 4 hours, or 8 hours. He billed 4 hours to this customer, but he spent 4 hours, you know, working on the shop vehicle, shoveling snow, fixing equipment. He was productive. He just wasn't billing the customer for it. So that's kind of how I look at productivity. I hope that answered your question, Alan. If not, let me know, and I'll try to clarify it a little bit. Any other questions that you may have? As always, if you have questions or concerns that you'd like to talk with me about, the easiest way to get a hold of me is my office. And let me give you the 800 number since a lot of you are out of California. It's 866-526-3039. Again, 866-526-3039. Give me a call, leave me a message, I'll get back to you. Again, just include your time zone, and I will send all that contact information out to you in the email today with the spreadsheet attached, as well as the package that's going out this weekend with the DVD and stuff. Okay, let me see here. We had a couple questions. All right. Okay, thank you, Paul. Paul says, excellent job, Malin. Thanks. Come out to the East Coast. I will as soon as it gets warm again. I don't do snow. No, Paul, we'll work that out. I'll get out there so you guys. I know you've asked a couple times. The next one is, do you have any way to motivate suppliers to do more accurate parts to delivery or timeliness? Great question. Here's what I do, Sue, is I meet with all my suppliers. I meet with the owners or the managers, and I pretty much explain my expectations, and I tell them that I'm going to make you first call. I'm going to expect great service. I'm going to pay my bill on time. I'm going to do everything to be a model customer, but I want to be first delivery, and I want you to take care of me first. And, you know, you do a lot of business with some of these people. Sometimes that helps. The other thing is just try to foster a relationship so they understand you're really interested in service. Don't beat them up on price. I see a lot of shop owners that say, hey, look, you know, if you give me this price for $5 less, I'll buy it from you. Stop doing that. Take that price, whatever it is. Let's say it costs you $10, and you mark it up times 2.5, which is our recommendation. It sells for $25. If you buy that part for $5 and you mark it up times 2.5, you just lost profit. You got a cheaper price. The only way that that would work for you is if you still sold it at the higher list price, which some do, I understand. But the bottom line is I want service. I'm willing to pay a little bit more for every part I get, pass that on to the customer in a markup to get the very best service. But my deal is I cultivate a relationship with my customers, and I cultivate a relationship with my suppliers. I send them food. I take cookies to them. I thank them. You know, if we do a barbecue at the shop, I invite the counterman down because I want them to think of me as the good guy. If I have a problem, an issue, a concern, I never take it out on the counterman. I always go to the owner, salesman, or manager, and I'm very calm about it. I just tell them how they disappointed me. But I tell them what my expectations are. First delivery. If you're working with big companies, you may not be able to get much pull, but that's how I start. So I start with trying to develop a relationship with the guy on the counter and work my way to being a good customer that they don't want to irritate by poor service. So I hope that answers your question. You're welcome, Sue. Anything else? Anybody else have a question? Well, if somebody does, go ahead and type it in. What I'm going to do now is I'm going to say thank you very much for your time today. I hope you found this beneficial. Again, if you need anything, if there's anything myself or anybody in ESI, any of the associates in ESI can do to help you, by all means, pick the phone up, give us a call, shoot me an email. My email address is Malin, M-A-Y-L-A-N, @esiseminars.com, and I will try to get back to you just as quick as I can. Like I said, I'm only in the office today, so it might be Friday, Saturday before I get back to you, but I will try to get back to you in a timely manner. Make sure you put on your schedule the upcoming profit structuring seminar in January and the other ones. The one in February, we're going to try to address the internet phone shopper, people calling you and beating you up on price, try to give you some more tools for that. That would be a good one for not only yourself but also your salespeople. And again, all of these webinars on the screen right now are going to be recorded, and part of buying into the webinar, you will get access to a copy of it, so if you can't stay the whole time or your employees can't stay, you can still give it to them. They can watch it after the fact. And also the 1-hour phone consultation, let me explain, that's not just for you guys, the owners, managers. If you have an employee that has a question, if they sit in on any of these webinars and they have a question, it includes them. Be more than happy to try to clarify things for them also. So I see no more questions. I appreciate your time today. If you have comments that you'd like to make about the webinar privately, email them to me, give me a call. I'd like your input as to how we can make this better. I'll be honest with you, this is only the 4th webinar I've done, and talking to a computer screen, for those of you who have watched me in person, is very difficult for me. I'm ranting and raving and running around my office. I do appreciate your time. Anything that we can do, if there's a webinar or something that you think we might need to put on that of his interest to you, let me know that also. So you folks have a great afternoon. Go out and make some money today. Be kind to your customers. Pat your employees on the back and make some money today. Thank you so much, and if I can do anything, just give me a call. Have a great day.